It's time for the Phil Ferguson Show.
This is Phil Ferguson, and you are listening to The Phil Ferguson Show. I was recently talking to a friend of mine who's also a financial advisor, and they've decided to launch a podcast. So I was giving them some tips, and they got their first couple of episodes out, and they were about 20 minutes long. And they were looking at some of my shows, and they're like, oh my God, Phil, you're doing 60 minutes, 90 minutes sometimes. How is that possible? Well, first of all, not only do I like to talk, I like to hear the sound of my own voice. So I enjoy this a lot, and I think I have a lot of information to share. And this is going to be one of those really long episodes. So hopefully that makes you very excited and not sad that you've got to trudge through it. But a couple of things that we're going to cover today. Another segment in the ongoing series that I'm calling Investing 101. All about bonds, or bond basics, I guess. Just some information that might help you as a new or intermediate investor, intermediate skill level understanding, know some more about the different types of bonds and how they work. I also have an additional segment that I had not planned in advance, well, maybe a couple of days ago, but to have in this show. It's about preferred stocks. I have talked about preferred stocks. Maybe this is kind of a follow-up on the previous Investing 101 segment on stocks, because preferred stocks are a type of stock. But it's also I don't want to call it a super shitty fund. It's not a fund. It's a super shitty investment, in my opinion. And it was brought to me by someone who is a brand new client, and they have these kind of stuck in their portfolio, and we're trying to figure out how the fuck to get rid of them. So I might have an update on that. But I go over what these things are, what they bought, and how it works. And I didn't mention their names or where they're from or anything, so hopefully no one knows other than them. And I like to warn people that it's nothing personal. It's not about me talking about you. It's me using your negative experience to help others not get fucked. A lot of wonderful comments from, I think it was the last show, how to unfuck your portfolio. So what to do if you accidentally or intentionally sold out and then watch the market recover or go up. What to do if you have a big pile of cash that you either got or somehow have, or maybe if you just ended up with way too much in one or two particular stocks, maybe because you work for that company or just you got lucky with one of them. And kind of a follow-up on stocks, I had many, many, many listeners. Thank you. I really do mean it sincerely. Let me know that I fucked up the recommended book list. It's not something new, so it's been in previous episodes, but because I didn't have a script in front of me and I was going off the top of my head, I screwed that up a little bit. And so I just want to real quick recap the 4 books that I do recommend. And I do recommend that you read them in this order. Even if you've been investing for a while, the first couple books might seem too simplistic for you, but you never know. You can learn things. I often read a 500 or 800 page book on investing and learn something. So I'm into that, so that's okay. The first book, The Richest Man in Babylon. The Richest Man in Babylon. It is close to 100 years old, I think. It's out of copyright. Many different publishers have put it out. I think it's on YouTube for free. And I always give people a warning that in the middle, it seems it is a little redundant, and then it kind of gets better at the end. The book, being 100 years old, is also not woke. Okay, so if that's really going to bother you, skip it. I don't want to hear about it. I'm warning you in advance. The way it talks about women, the way it talks about slavery is a reflection of its time, and it is not contemporaneous thought processes that people should have about our society. But the money part of it is absolutely fabulous and kind of timeless advice. Second book, A Random Walk Down Wall Street. Again, late 60s, early 70s, multiple updates and revisions, get something relatively new. The third book, Winning the Loser's Game. Also a book from the late 60s, early 70s, and has been revised multiple times. And then the fourth book, which I do insist that you get in some kind of paper format, and you do not treat it as just a casual read. It actually is pretty hard. It has a lot of data, statistics, graphs, charts, and treat it like a textbook. Take your time. You may have many, many, many years ahead of you for doing investing. Spend 6 months or 12 months going through this book. That book I consider my Bible. I actually do have it in Kindle version, audio version, and a hardback, and maybe even a couple of hardbacks floating around in the house. I think it has that much value. I treat the audiobook and the Kindle version as resources, something I can go re-listen to. But I do recommend that you start with the paper version, have a notebook, take notes, write on pages, highlight, dog ear the pages. I think that's what it's called. Whatever it takes for you to do to study. And again, like I said, take your time. It's not a race. You need to learn this information because you can end up with a whole lot more money in the long run by doing things better. So that's a little update on the 4 books that I fucked up, I think, 1 or 2 episodes ago. So still coming up for today, like I said, we have ideas on bonds, bond basics. We have preferred stock, little rant/update there. And then, of course, I have my interview with Ryan Burge, where we are going to talk about some data and statistics in this show about how the nuns, N-O-N-E-S, are growing and growing dramatically in the United States. What does that mean? Why is that happening? Church attendance is down. I am ecstatic about that. People being freed from the chains of religion. So we're going to talk about those kinds of things. And again, it's probably going to be something close to 90 minutes. Hopefully you enjoy it. If you appreciate the show, you can go leave a 5-star review at Apple Podcast or Stitcher. Of course, if you want to get rid of the annoying commercials, if I put them in, or if I let the company put them in, I have mental problems with this. But anyway, you can go to patreon.com/Phil and sign up to be a patron as little as $1 per episode. And $1, honestly, for the 4 to 8 hours I might spend, and sometimes more, putting together, editing, recording, figuring out what to talk about, figuring out who to interview, scheduling the interview, interviewing, maybe a little editing. It takes a good chunk of time, and I'm just asking for a couple of bucks for all that time, and hopefully you find it useful. The other thing you can do, of course, is recommend the show to a friend or a family member, someone that you think might benefit and end up with more money in the long run because of some of the ideas and topics and information that is expressed here. I'm going to wrap up the intro section. We have a little break, and then we're going to get into the really good stuff.
Hey you, it's me, Sarah Silverman. Lately I've noticed a lot of really sad, really long commercials on TV with grossy, sick, emaciated people from all over the world. And it turns out they look that way because they don't have food. And I know what you're thinking. If you don't like it, Silverman, TiVo past it. I did. You still see them. Especially because, I have a 48-inch plasma high-def TV. So every devastating image is in, brilliant, crisp, vivid. Like they're in my apartment, So how do I get these people out of my apartment, basically? And I think I figured it out. All I have to do is end world hunger. And then I'm okay, how are you going to end world hunger? And then it hit me. Sell the Vatican, feed the world. about it. We need a hero. And who is more primed to be our hero than the Pope? He's literally a caped crusader. What is the Vatican worth? Like $500 billion? This is great. Sell the Vatican, take a big chunk of that money, build a gorgeous condominium for you and all of your friends to live in, all the amenities, swimming pool, tennis court, water slide. And with the money left over, feed the whole fucking world. You preach to live humbly, and I totally agree. So now maybe it's time for you to move out of your house that is a city. On an ego level alone, you will be the biggest hero in the history of ever. And by the way, any involvement in the Holocaust, bygones. I know some of you out there are like, well, why don't those bums get a job like the rest of us? Well, did you know that the average Arby's employee in Ethiopia only gets paid nothing an hour because they don't have one. They don't have one. The bottom line is this. If you sell the Vatican and you take that money and you use it to feed every single human being on the planet, you will get crazy pussy. All the pussy. And I don't mean literally. That might not be your cup of tea. I don't know what your version of all the pussy is. But you'll get all the pussy. Amen.
You're listening to The Phil Ferguson Show.
This Investing Skeptically segment is part of my, Investing 101 series. I did one on stocks a few weeks ago and even had a little update on it recently. This one is on bonds, and we're going to keep it very basic, but I just want to kind of go over bonds, just the topic of bonds, I guess. And one of the things that I find very, very common is bonds cause a lot of confusion for people. And one of the things to know about bonds is that they are actually more complicated than stocks. Wildly more complicated than stocks. There's a couple different ways you can have stocks. You can have different classes. You can have preferred stocks. You can have all kinds of different things. But with bonds, you can have very short-term bonds, maybe something that's due in a week or 3 days or a month, 6 months. You can also have long-term bonds, 10 years, 20 years, even 30 years sometimes. And they behave in different ways. You can have really secure and safe bonds like U.S. Treasuries. In U.S. bonds, you can have notes, bills, bonds. You can have junk bonds. You can have international bonds. Bonds that are municipals, that are tied to a city or state or some local taxing agency, even necessarily, or not necessarily, even connected to a stadium development, a toll road, toll bridge. You can have bonds that are domestic. You can have bonds that are international. You can have emerging market bonds. You can have bonds that are tied to the value of an asset, like a giant construction equipment tractor or a building, or like I said just a moment ago, a bridge, toll bridge. You can have bonds that the rates aren't fixed and it might change. You can have bonds that are callable, where the person that's paying all the interest decides that they could get cheaper financing somewhere else now, maybe because their situation has increased or improved. And so you won because the company got better that issued maybe a junk bond, but now they yank the bond out of your hands and give you your money back because they don't want to pay the interest anymore because they don't have to. So when things go well, you don't get the interest you hoped to get when things went well because they called the bond. You can have TIPS, Treasury Inflation Protected Securities. Not something I use right now. I've pondered it, but if you're really, really worried about inflation, you could get TIPS, Treasury Inflation Protected Securities. The problem right now is the default interest rate on those is actually negative. I don't know if it's -1 or -2, but it's not positive. It's negative, which sounds counterintuitive, but the perk is that if suddenly inflation jumps to 10%, that bond may increase the payout and give you 4 or 5 or 6% yield instead of the -2 because inflation increased. So not all bonds are created the same. Not all bonds respond to the market. Oh, I didn't even mention Ginnie Mae bonds. And that's just, the normal stuff. There's all kinds of extra complicated things that you can get. But bonds behave differently than stocks, which is one of the reasons I think they belong in the cushion where appropriate and can be an important part of your portfolio if you want to reduce some of the volatility or have access to part of your portfolio in case the stock market goes down dramatically. The safest thing that I can think of is something like Vanguard's short-term U.S. government bond fund, because it's pretty much not going to go up much and it's pretty much not going to go down much. The symbol for that fund is VBIRX. Just as an example to walk you through it, the current yield on that fund is 0.3%. So really close to nothing. The thing that's really odd is that over the last 12 months, that fund has made 4.7%. And that may not sound like much to you, but that's crazy high. And so let me walk you through another fundamental idea of a bond. And again, I'm going to make it so painfully simple, at least to start with. If you buy one bond, a single bond, $1,000 bond, and let's say it pays 4% interest, not likely for a current, really safe short-term bond, but we're just making a theoretical example. You buy this bond, it's a 1-year bond, you pay $1,000. The absolute most money that you should expect from this bond is that if it's paying 4% at some point at the end of the year, they're going to give you $40, and then they give you your $1,000 back. So you started with $1,000, you get your $1,000 back, and you get the 4% interest. That should be, under most circumstances, the most you're ever going to make with that bond, because everything else becomes problematic. So how can a fund that's paying 0.3%, how did it go up 4.7%? Well, the trick is a year ago, it was paying 1.3 or 1.5% yield, and then the yields fell, so the prices go up. As an example, that 4% bond that you paid $1,000 for with a 4% yield, and let's say the day or two after you bought it, you said, oh my God, I don't want to own that anymore. But in the meantime, interest rates fell to 2%. These are extreme examples to make it clear what's going on here. Another person that goes into the market and buys that exact same bond brand new from the U.S. government pays $1,000 and would only get 2% interest or $20. So the question to you, the listener, is when you get your $1,000 back, would you rather get $1,040 or would you rather get $1,020? Clearly, getting $1,040 back is preferred for almost everybody. Someone could create a weird scenario where that's not the case. So that bond is more valuable. So if you had the choice, would you pay $1,000 for a bond that gives you $20 or $1,000 for a bond that gives you $40, assuming the same length of time and the same risk level? We're keeping all of that constant. Of course, you want the $40. So if you already bought a bond that will pay a $40 dividend and now you want to sell it, you could sell it for more than $1,000. How much more? Of course, there's fancy formulas to calculate that, and you could go look them up. But basically, the price that you could get would be sufficiently high enough that it becomes virtually equal to what the going rate on the new bond is. So that $1,000 bond would go up enough to give the impression that it's still paying 2% 2%, because that's what a current bond is. So you would be willing to pay so much more for that bond that you would feel like you're getting 2%. Also, don't forget, you can't get too carried away with changing the price of the bond, because if you paid $2,000 for a $1,000 bond, your effective yield would be 2%, not 4%. So as a percentage, you've now equalized. However, we both know, because of the scenario we set up, that this bond becomes due or matures in 1 year, and they'll give you back $1,000. So most investors aren't willing to pay $2,000 for a bond that's going to give them $40 and $1,000 a year from now. If you pay $2,000 for that, something's wrong. That's not a good strategy to make money in bonds. So it won't go up anywhere near that much because it's due in a year. So what it might do is go up by $20. So someone might pay $1,020 for your $1,000 bond, because at the end they'll get $1,040, which is $20 more than they put in, which would be pretty close to equivalent to buying a new bond that pays 2%. Hopefully that made sense. So the only way you can make more than the yield of a bond or a bond fund portfolio is when rates go down. I guess maybe I should say that's the most likely thing. And how much effect will change in interest rates have is easily found online. Morningstar has this. Any good prospectus for a mutual fund that you're thinking of will have this. Is a number called the duration. And the duration will tell you how much effect a change in interest rates will have. So the basic idea is that if interest rates fall, an existing bond becomes more valuable. If interest rates go up, your current bond becomes less valuable. So if that bond is $1,000 and pays 4%, but now I can go out and buy the same bond, same length of time, same risk profile for $1,000 and get $60, who wants to pay $1,000 for a bond that pays 4%? I don't. I might pay you $980 for it, not $1,000. So when interest rates go up, any and all bonds that you own go down in value. They will return to the face value or the purchase price when you get closer and closer to the end of the bond, the maturity of the bond, when it has to pay back, in this case, the $1,000, because that becomes more certain. So this effect is calculated by duration. And in duration, longer bonds have a bigger calculation for duration. So a 1 year bond, the duration calculation is going to be really close to 1. But if you get a bond or a bond portfolio that has a lot of 20-year bonds, that duration calculation might be 18 or 17 or 20 or 21, depending on the mix in that portfolio. And what that means is you can have really wonderful effects like we had last year in a fund that I'm currently not using, but I wish that I did in the last year, is the Vanguard long-term U.S. government bonds, and that's VLGSX. Its current yield is 1.47, but its yield a year ago was close to 2.5% to 3%. Because of the drop in interest rates and yields, that fund last year, the 12 months that make up 2020, that fund went up 18%. And the calculated duration on that fund is 18.7. And so 1% drop in interest rates made that bond portfolio go up 18%. And you made a lot of money if you owned it and then sold it at the beginning and end of last year. Of course, I'm a little sad that I didn't use that fund. And the reason I didn't is because interest rates were, and are now even more so, at historic record lows. Why did interest rates fall? A little bit of a softening in the economy, COVID, and other fuckery stuff that Trump has been doing has, hindered the economic growth a little bit. And so to stimulate economic recovery, money supply has been increased, which tends to push down interest rates, and that fund was a benefactor of that. However, a fund that can make that much money in very secure and safe and conservative and low interest bonds, the opposite can also be true. So if interest rates on long-term bonds goes from 1.5 to 2.5%, you could think that maybe you're going to make 2.5% on that portfolio and then suddenly find that you lost 20% in 12 months. Interestingly, I just pulled up this fund on Morningstar, and over the last 3 months, it's lost 11% in 3 months. And so this is one of those things where history does not tell you that this is a good fund to buy. You have to understand what the fuck you're buying. So if you look at 1, 3, 5, 10-year history, the performance of this long-term bond fund is wildly, wildly better than the short-term bond fund. And so you might think, wow, instead of making 2% over 10 years, this fund made 7.6% over 10 years. That's the fund I want to own. And then suddenly get whacked upside the head with 11% loss, a 20% loss, even 30 or 40% loss if interest rates spike, maybe caused by inflation from overstimulation of the economy. I don't know that that's going to happen, but when interest rates are at all-time historic record lows, to me, it seems statistically more likely to happen. So what will happen? I don't know. But these are the kinds of bonds that right now I am avoiding. Long-term bonds, especially high-quality bonds, because high-quality bonds, the duration is more important. The fluctuation in market interest rates are more important. And you can own something that you thought was really conservative, and it's going to be called really conservative. Triple A rated bonds, the best you can get. It's at Vanguard. It's an index fund. It's the best fund you can get with the lowest expense ratio. And you think you've done everything right. You did your research. The fund that has made 7% or more per year in bonds as interest rates went down. If interest rates go up over the next 5 to 10 years, this fund could be something that loses 5 or 10 or 15% per year for years to come. And you could find something that you thought was very conservative. And kind of in a way it is. It's AAA rated U.S. government bonds. But all of a sudden, 5 years later, your $100,000 investment is worth $50,000 or $60,000. That is why it's so very important to understand bonds, and why bonds can be so very tricky, because you knew enough to figure out it was really good, but you didn't know enough to figure out how you could get fucked. So that's a problem. Another thing, so right now I'm looking for bond funds, bond index funds that typically have a duration of less than 5. And again, that's the more conservative, the more meaningful that duration calculation is. I also use an emerging markets and a total international bond fund because they're convenient. But they also have durations that are over 8, which kind of violates my goal of under 5. But these are used in small allocations. I think it was show 352 or 356 last August that I talked about all of the funds that I use in bond fund and bond mix for people that are building their cushion. These are small amounts, a fraction of the cushion, and they might make good money. They might lose good money, but it might not be for the same reasons as the really safe U.S. bonds. So if U.S. interest rates go up because our economy is recovering before everybody else, U.S. government bonds could all go down, at least in retail value and the value of the portfolio, where emerging market bonds might still pay out 4 or 5%. They don't always go together. Also, I'll use a junk bond fund at Vanguard. Its duration is 3.4, and interest rates have very minor effects on a junk bond fund because the risk is already built in, and often you can get junk bonds that pay 3, 5, 8, 10%. And of course, the higher the yield, the higher the risk. The higher the risk and the higher the yield, the less effect short-term interest rates on very conservative and safe bonds has to do with anything. Because if a bond is paying you out 10%, that company is paying out 10% because they have to. It means they couldn't get a bond for 9, or sell you a bond for 8 or for 5 because no one would fucking buy it. You need to pay out 10% to account for the risk that's involved with that bond. If interest rates go from 0.5% to 1.5%, most holders of that bond still really don't give a shit because that company's still at risk, unless the company got more risky or less risky, and it's still going to pay out about the same amount of things. One thing that is typically annoying with high yield bonds is that they can drop dramatically when the stock market drops dramatically. So you might think, okay, I'm going to make way more than 1 or 2% interest on my really safe conservative bonds. I'm going to have a whole lot of junk bonds. You can choose to do that. That's okay if you know what you're doing. What bothers me is a lot of advisors and a lot of brokers don't want your bond portfolio to be showing that you're going to make 1% going forward, because that's embarrassing. It looks awful. And it's one of those things that I tell people, well, that's just the way shit is. So if you want higher returns, you have to take higher risks. But if it's the cushion, that's the part of your portfolio that you're trying to not have higher risks. So I had a few people last year that are either new clients or prospective clients that would show me their portfolios in other locations, and I would look up the bond funds that they owned, again, at Morningstar.com. Anyone can do this. And you look at the portfolio of that bond fund. And as an example, I'm looking at the Vanguard fund here right now, and it has 50, 80, 85%, 90% are junk bond stocks, which you would expect in a junk bond fund. And it, when the stock market last year in March, when the stock market fell 30, 35%, this junk bond fund did pretty much the same thing, because those high interest rates can only be paid by the companies that are able to make enough revenue to pay the dividends on those bonds. And when the stock market takes a hit, a lot of the junk bonds take a hit, and they have a dramatically increased probability of either short paying the dividends, not paying the dividends, or even more importantly, if that company goes broke completely. High yield bonds are in line to collect money before the shareholders, but they're after employees and governments and other debtors and senior notes and secondary senior notes, yada, yada, yada. After all bonds are paid, then you might have a chance of getting your money back on the high yield, aka junk bonds. And then any money that's left after that goes to the shareholders, people that own the stock, which is why when a company goes bankrupt, they might be able to pay a whole bunch of people a whole bunch of money, but the stockholders end up getting nothing. Well, junk bonds are really close to stocks in that way. So a company that has big struggles has to pay a really high rate. One of the examples I give people is you currently have this house and you have a mortgage, and let's say your mortgage is 4%. Would you go out and refinance your house at 8%? And when I give people this example, they're like, well, that's the stupidest thing I've ever heard, Phil. What the fuck would you even suggest that for? To make the point that why would you pay 8% interest if you don't have to? You want the lowest rate you can pay to borrow money. So do corporations. And when corporations issue bonds and they have to pay 5% when the really safe and secure rate is 0.5%, you have to ask yourself, why are they willing to spend that money? And the answer is because they have to. And the more dramatic, the bigger, the more extreme that payment is, the more risk that you're taking. So be aware. So you have default risks with bonds, and so you need to know how safe and secure the ratings are on the bonds in your portfolio, how well is rated that bond portfolio. You have to consider how long the bonds are, duration. Generally, historically, over the last 2.5 decades, I've used intermediate and long-term bond funds because you get a year maybe where they make 10 or 15%, and then you get a year that they lose 10 or 15%, and again, maybe some other type of bond made money in your portfolio. But right now, I think it's way more risk and way less benefit in long-term bonds, so I'm avoiding those. So those are some thoughts on bonds and how they work. I meant this to be kind of like a 101 thing, but I got into a lot of stuff. So if that was too complicated, let me know. I can try again. If I messed something up, let me know. And I know you guys do. And I'm very delighted that so many people listen closely enough to catch my mistakes. It just makes the show better for everybody. But this wraps up bonds, investment 101, dash bonds, whatever. Hopefully it helped you understand a little bit more about bonds and bond funds. The Phil Ferguson Show is for educational purposes only. Nothing said on the show should be interpreted as personalized investment advice. Your investments should be based on your situation, and you should consult with your financial advisor before taking any action. The show may contain ads. These ads are placed into the show by the hosting company after I finish recording and editing. I have little control over the content of the ads, and you should not assume that I support their products or claims. If you choose to support the show via the new Patreon page, that support does not create an advisor-client relationship. This Investing Skeptically segment is called Preferred Stocks. And I do it that way because I think this is technically a preferred stock. They're calling it a preferred stock. The company is something like Preferred Apartment Communities, and it caused me a lot of confusion and frustration and anxiety. I have a new client that has become very unhappy with their current advisor, a broker. I don't know if I really want to get into the name of that company, but they would look at the things that they were owning, that they owned, or I guess still own. This is an ongoing dilemma for me from a professional standpoint. And they started looking at the things in their accounts and saying, hey, wait a minute. Phil's talked about this. This might be something that it's not evil, maybe bad, definitely suboptimal, where it could clearly be bought by the advisor because the advisor makes more money than the customer that they are working for. But are they working for the customer? Because clearly not a fiduciary. And I don't think any of this stuff crosses a line of legality. But shit, investments, sure. Yeah. And so there's a company, Preferred Apartments, and they actually have a publicly available traded stock. And a few years ago, they came up with a new creature that until now has escaped me because it's, one of a million things out there in the market. I used to think that I would run out of things to talk about on my show, or run out of definitely things that might trick people. And this is new. 25 years I've been doing this. But they started this, I don't know, give or take 10 years ago. So what they're doing is they're selling preferred stock. I've done segments on preferred stock. In general, I'm against them. That means I'm against them. I don't think you should have preferred stock unless maybe there's an index fund of preferred stock or some very efficient managed fund that works with trades in preferred stocks. One of the really big problems with preferred stocks is they are tricky as fuck. And there can be all kinds of what ifs, caveats, notes, details. And matter of fact, this specific document that I'm looking at is the prospectus for this specific investment, and it's 91 pages long. I can't read this. I mean, I can read it. I can't understand everything that I'm reading. I'm getting a lot of it, but I'm not going to read all 91 pages. I'm just kind of sifting through, scanning it a little bit, pulling out a couple of things that popped. Who has time to read 91 pages of a legal contract? Who's going to? You're not going to. I'm not going to. Maybe you are. And if you read through all 91 pages and you decide that this indeed is the thing for you, hey, maybe I'm missing something. Maybe this is a good idea for somebody. I just don't know who the fuck that somebody might be. And it's definitely not my brand new client. So a couple of things. Normally preferred stocks sell for $25 a share. And I've done episodes on this. You can search the back catalog or email me if you can't find it. But I think if you just Google Phil Ferguson preferred stock, you'll find it. One of the problems is preferred stock are often a separate underwriting from the main stock of the company. And the broker-dealer that helps do the underwriting is usually the one pimping these preferred stock, usually, again, selling them to you at $25 a share. But there is some confusion, at least on my part, at how much money the broker can make selling them to you. So they may actually buy them for something like $20 a share from the issuing company and then sell them out of their inventory to you at $25. So they're not facilitating a trade for you. They're convincing you to buy something they already own so they can make a bunch of money. I don't like that. I don't like it at all. And of course, the real sexy draw for most preferred stocks is they can pay 6, 7, 8, 10% yield, assuming they actually have the funds to pay those yields. But this is a preferred stock that is $1,000 per share. And that price point doesn't necessarily make it bad, but it's just different. That different weirds me out because I like to invest in things I understand. One can make plenty of money in the long run investing in things that you understand. Why get creative? One of the interesting things in the prospectus is this following sentence, 2 sentences, 3 sentences. Anyway, quote, "There is no established trading market for our Series A redeemable preferred stock or any of its warrants, and we do not expect a market to develop. We do not intend to apply for a listing of the Series A redeemable preferred stock or any of the warrants on any national security exchange." If I read that, no, I'm out the fucking door. Because what that means is you are buying something that you can't, or you may have difficulty, perhaps extreme difficulty, redeeming, selling, because there's no marketplace for it. You can't go on the Amex or the NASDAQ or whatever other market that might exist for selling things. This is not listed. So the only way you can sell it is back to the person you bought it from, the company that's selling these preferred, and I've got my air quotes up, preferred stock. I'm assuming they technically qualify for that designation, but they're weird. And of course, a couple of places in the document, they announce that if they don't have sufficient cash on hand to redeem your shares, they can choose not to redeem your shares. So you pay $1,000, you can't sell them to anybody else. I mean, you could do a private sale, but there's no market. Private sales are really, you don't want to do that. You could send them back to them and say, "Hey, I've changed my mind. Give me my money back." And so they're redeemable. And of course, they have set up a penalty system if you redeem them early. It starts with the first year of a 13% loss. So if you buy these or your broker buys them for you, and then you decide, "Hey, I actually don't want this thing," sell it back. If the broker then sells it back to the company, you may have to pay whatever fee or charge the broker charges you to facilitate the transaction, and you will lose 13% per share of the amount that you put in to get your cash back. And at this point, I'm looking at this and thinking to myself, if you lose 13% to get out, and that's all you lose, you won. You won, because I don't see how this is going to be. I don't see an option that's going to make this better than what it is. Of course, like I said, there's several sections where they say if they don't have the funds, they don't have to redeem it. And you may be stuck in this for 10 years. There are promised dividends, which may or may not be paid. And of course, if they don't have the funds to pay you back for the shares, they may not have the funds to pay the dividends. And a lot of their ability to pay the dividends to you is that money is created by selling continuously new additional shares, which sounds kind of like a Ponzi scheme, but it's legal, so it's not a Ponzi scheme. And it's very much like the master limited partnerships, which I'd previously done segments on. Master limited partnerships, you buy equity into a company that produces either natural gas or oil pipelines, and they pay wonderful dividends until the pyramid collapses. I mean, it's not a pyramid scheme, not a Ponzi scheme, but until the money stops flowing in, and then all of a sudden the value of your asset collapses. And of course, here they also have the option to recalculate what those preferred stocks are worth. So at the time they sell them, it's $1,000, but later they might say, oh yeah, those haven't done so well. And since there's no market, whatever price we say is their actual value now is what the actual price is. And we've decided that they're worth $650 minus the 13%. So this is something that can happen. And of course, if you hold it for years, not only do you potentially lose the money, of course, you could potentially get the dividends that they've promised. It could happen. It could happen. I have to allow for that possibility. And you have some kind of markdown potential. You have a big fee that you have to pay, a percentage that you lose to get your money out. And even if you don't lose any money, you own this for 10 years and you just get your $1,000 back. That's money that you didn't make by investing somewhere else. So they take that money and theoretically they're buying properties, which real estate. So it kind of also ties into REITs, and it's similar to what I've talked about before. Another thing, private placement REITs, but these are, I'm guessing, technically preferred stock. And this all came to a head because, like I mentioned, I have a new client, and I don't mean any ill will against them because they're very nice people and they might listen to this. And of course, they've hired me, but their previous advisor bought this stuff for them, and I can't figure out how in the world that it seemed to be a good idea, other than the fact that it pays a nice commission. It looks like it's 7%. Thankfully, this is not the bulk of their assets, but it became a problem when TD Ameritrade notified me that they can't hold these. And I thought, wait, how can TD Ameritrade, one of the largest broker dealers in the country, not hold I thought I said Pacific there for a moment. A specific preferred stock. How is that possible? And this is why, because there's no market for it, and they don't want to hold it and risk being responsible for giving you your money back. So it can't transfer. And now we're going to go into the game of seeing if these can be sold with the current advisor, who the client no longer wants to deal with because they see the things in their portfolio that they own that are suboptimal. We'll just go with that. Things that are suboptimal, and some of them have to be sold before they can move their money and their accounts over to even allow me to manage it for them. So it's gotten complicated, and it's very frustrating to me. I'm assuming it's very frustrating to them. And maybe when this all settles out, I can give you an update on how well it actually went. Maybe it'll go better than I think. But I'm very concerned that this money is very hard to get out. You may not be able to get it out. You may only get a fraction. It might be a large fraction, but you might get a fraction of the money out. There are fees to take it out from the company that issued the preferred stock, and there might be fees from the broker to facilitate the transfer or redemption of these shares. So I'll keep you posted, but that's something to keep an eye on. Preferred stock in general, I recommend against it unless you know exactly what you're doing. And if that's the case, cool. Good luck to you. And that wraps up this segment on preferred stock.
You're listening to The Bill Ferguson Show.
Now it's time for our fun-filled interview with Ryan Burge. He was on the show about a year and a half ago and kind of sort of rose to fame by making really clever and intuitive and understandable graphs that compare different religious traditions, people who are not religious to different types of religion, and being able to present data in a very easy to understand way. And of course, he has a new book, which we will definitely talk about. Ryan, how are you today, sir?
I'm doing great, Phil. Thanks for having me on.
Not a problem. What's the name of the book and where can they find it? Let's just get the obvious plug out of the way.
Yeah. It's called The Nuns, N-O-N-E-S, where they came from, who they are, and where they're going. Published by Fortress Press. You can go on Amazon.com right now and buy yourself a copy. The actual release day is March the 9th, but they're already shipping copies to the early pre-orders, so you can get one in your hands, I think, by the weekend.
Nice. So, The Nuns, excellent. And you had the subtitle, where they come from, who are they, where are they going? If my listeners, dear listeners, if you like looking at charts and graphs and a little bit of data, it's not heavy math like figuring out the Einstein-Rosen formula for a black hole. It's just some statistics. It's okay. I got a PDF copy that you were kind enough to send me. I couldn't believe how fast I read that. I'm not a very good reader, much more of a talker. But it read very, very well, very easy. And of course, it's a subject I'm kind of into, and I know you're into it. So, what's in the book? Give me a few highlights, and if you want, I'd be delighted to talk about your new tweet today about Methodists.
Yeah. So the book is 31,000 words, 160 pages, and 42 graphs, which is like the ratio that I love. Like my graph to word ratio is like 300 words for one graph.
Yeah.
That's how I want to go through life, because I think graphs do a better job of explaining the world than words do in a lot of ways. So the book really takes you through a couple different things. The first one is just kind of tracking American religion over the last 46 years. Talking about evangelicals, mainline Protestants, black Protestants, Jews, the other faith groups, and then Catholics, and then obviously you're religiously unaffiliated, because that's really what we're here for, is trying to explain this sort of meteoric rise of the nuns. Second chapter is really about a bunch of different theories about why the nuns have gotten so large so fast. And I sort of, I think I take you through like 8 different theories, things like the Catholic Church scandal, the internet, secularization, politics, things like marriage, and really sort of try to show you in the data that nothing really explains this phenomenon completely by itself.
Right.
That the world is a multifaceted, multidimensional place, and to pin it all on one thing or another thing is to vastly oversimplify an incredibly complicated phenomenon that's been happening for about 30 years or so. Then I sort of track what type of people become nuns in terms of age, gender, race, and all those things, and then I spend a while trying to differentiate the 3 types of nuns: atheists, agnostics, and nothing in particular. So there are 3 different groups, and they sort of behave differently. They have different incomes, different educations, and it's really, I think, unfair to lump them all together into one group. I just think that loses a lot of academic rigor. And then at the end, I sort of talk about, what the future of American religion looks like. If churches are interested in thinking about the nuns, here's how they should probably think about them. If they're interested in reaching out to the nuns, here's what they should consider in doing that. That's really what the book's about.
Yeah, and I want to get into a little twist near the end, but I'll mention now, and I hope you don't mind, but you are a Christian.
I am.
I'm
actually not just a Christian. I'm a pastor. I've been a pastor for my entire adult life, basically, in the American Baptist Church.
Yeah, so you believe in Christianity and the deity of the Bible and Jesus and some of those basic tenets that we all think of as being part of Christianity.
On a good day, I do, yeah.
Okay. And we'll come back to that, but I wanted to know, because the nice thing about this is that it's very easy, especially at the end of the book, to see your personal spin on what this information might be usable for. But before we get into that, there's my tease for the listeners. What's going on, and nuns, or the unassigned, the nothing in particular subgroup, why is that growing? Go over some of the ideas that have been proposed and what you think might be the best candidates for explaining some of this.
Yeah, so one is just a methods thing that people used to lie on surveys a lot.
Yeah.
It's called social desirability bias.
And they still do, of course.
Yeah, they do. But I think it's gone down amongst these kind of questions, because it used to be really tough to say to another human being, like, I'm an atheist or I'm not religious, especially if you're in a community that's very religious, your family's very religious. And remember, almost all surveys for a long, long time were done through personal, communication. Like you sat in front of someone in front of a table and they asked you questions.
Oh,
so
yes.
So you had to talk to someone, a human being. And we know that people lie on surveys about things like drugs and sex and, racism, sexism, those kind of things. But also church. I mean, that's a big one people lie about. So I think that part of it is just people are being more honest. Obviously, I can't figure out how much that's happening, but it does seem like it's part of the equation. So it's just a methods thing, because now our surveys are being done all through the internet because it's cheaper. And because it actually thinks it gets you a better sample. There's been, Pew has now switched almost entirely doing online surveys because they just are more accurate in some ways. And to be honest with you, they're just a ton cheaper than doing it the old way, which is obviously a big advantage. That's one. Politics is another one that pops up a lot. And I think there's a lot to be said about politics. 40% of people who identify as very liberal are religiously unaffiliated. It's only about 10% of people who identify as very conservative. So obviously there's something there. I talk about that in the book a little bit. And then the biggest thing, and this is, I think my biggest explanation is just secularization, which is this old idea that goes back to like Emil Durkheim in the 1800s in Germany. He talked about as we become more educated as a society and more economically prosperous, we sort of throw off religion. Like we don't need the folklore anymore and the idea that, God makes it rain because we have meteorology and things like that. He actually used the word demagication. That's what Durkheim said. Secularization is demagication.
Right.
So I think, I talk about, that's like the macro level thing. It was this huge wave that started in Europe and basically took a long time to come across the ocean to America, but it hit the shores around the early 1990s and has just been kind of pushing America to being more secular over time. And I don't think there's any singular cause for secularization. It's just a natural process of civilization evolving, and it just happened to America a little bit slower than it happened to Western Europe.
Well, on that specific note, the United States versus Western Europe, do you think it's taken longer in part because many of the Western European countries have a formal religion, whereas in the United States, if you're not happy with the church that you go to, you can go to another one much easier than a lot of Europe.
Yeah, I think that's a big piece of it. I think the other piece of it is we don't have a long history of religious wars in this country. If you read European history, like most of the wars that happened in the Middle Ages were largely religious wars. The Crusades, the Inquisitions, all those things. There's definitely a lot more baggage when it comes to religion, because when the state and the church mix together, there's plenty of evidence now that says it actually hurts the church more than it helps the church. And Europe's kind of the classic example of that. So I do think it's been, when something becomes mandatory, people don't want to do it anymore. And I think that's largely what happened to Europe. But the other thing about Europe that's different than America is Europe is just much more collectivist as a continent. People are, the idea that we don't have universal health care in America is like Europeans are like, what now? Say what now? How is that even like a conversation for them? Because they're much more in it together. And if you think about what American religion is, especially Protestant Christianity, it's a very individualized religious tradition. So I think that also plays a role in why we're still stubbornly religious compared to our European counterparts.
I agree 100%. That's a big part of it. Of course, like you said, not all of it because it's complicated. But yeah, the rugged individualism of America, and that I'm going to take care of my own. I'm going to go out into the middle of nowhere. And so many of the people that came to America 200 years ago, 100 years ago, even today, these are the people that are willing to give up everything from their previous land, often leaving their families behind, coming over with next to nothing as far as money, getting a job and working your way up from scratch, where maybe in Europe or in India or in China or in Mexico, you have your place. Good or bad, the societies are often, here's where you are, and you have to stay in your area, your lanes, whatever phrase you want to use. But the ideal that brought a lot of people to America, self-fulfilling idea, is that I can go there and do anything. And that's a different type of average person.
Yeah, no, I tell my students all the time, the people who founded our country, the Europeans who came here and founded our country, were not the people who were doing well in Europe at the time. They were, a lot of them left because they were in wage prison or going to wage prison or debt prison because they couldn't pay their debt. So they had to get in a ship and get the heck out of the continent because they didn't want to spend the rest of their life behind bars. If you are the landed class in Europe, why would you get on a boat, get scurvy, and possibly die in Jamestown? Like, these are risk takers because the other option was bad. We were founded by a bunch of scoundrels. Like, I don't think we appreciate that fully.
I know because of my love of Italy and the Italian language that the vast majority of anyone in the United States, of course, there's always exceptions, and so don't need to write me an email, listener, but almost everybody that is Italian that came to the United States is from southern Italy because the economy there is not as strong. And if you live up in Rome or Milan, where there's wealth and businesses and you probably have better prospects for a good wage, why leave that? But if you live in Calabria in the mountains and there's nothing for you to do, okay, that makes sense. So all these weird effects that change things. But it is apparently clear from the data, and you have many graphs to show this, that the number of people that are nuns, to use the title for your book, and it's now a convenient word because we all know what it means, that number is growing. And is it going to keep growing? What do you think?
That's the $1 million question. I see data that kind of points both directions. I do think it's going to go up from where it is right now. So the best estimates, and these are Pew estimates and my estimates as well, kind of coalesce around about 30% of Americans today are atheist, agnostic, or nothing in particular, which is higher than what other estimates have been who do their surveys in person because of social desirability bias. Right. So I think the number right now is about 30%. If you look at the younger generations, for instance, millennials and Generation Z, over 40% of those generations are religiously unaffiliated.
Right.
So if you think about generational replacement, so as old, more religious people die off, they're going to be replaced by younger, less religious people. I think we get to 40% at some point in the future, but not in the near future. Probably in the next 30 or 40 years, we'll probably get to 40%. But I do think that there's a plateau somewhere in there. I don't think we're going to get to a place where America is as secular as Europe is, for instance. There's a very strong group of evangelicals in America. About 25% of Americans are evangelicals. And then there's a group of pretty dedicated Catholics, which are probably another 10 or 15%. I mean, there's 40% firewall right there. Add in your Mormons, your Buddhists, your Hindus, your Muslims, and things like that. I do think the reality is that America might be in 75 or 100 years 50-50. 50% are religious people and 50% are people who could be described as unaffiliated or nuns.
Fair enough. I'm a little more optimistic from my perspective because like you pointed out, a lot of the things with the younger generation. I know when my kids were in junior high and high school, and we lived in a very small, more conservative town, the number of kids that not only were not religious but were willing to say it in junior high blew my mind, because that shit never came up when I was in school. You might talk about being Catholic versus Protestant versus whatever else, but I don't remember ever thinking about it or talking about it at my school about what it's like to not be a follower of a religion or to be an atheist. But my kids expressed to me, both of them, that they did talk about it. So that's very different from just 40 years. Holy shit, 40 years ago.
But if you think about it, I mean, the internet changed everything in that regard. I mean, I talk in the book about, imagine you were like an atheist in rural Mississippi in 1975. Yeah. Like, are you ever going to find another atheist like in real life in your world? You're probably not, because how are you going to say, hey, you an atheist? Because I am too. Like, how do you do that?
Yeah, there's no hand signals.
No, you don't have a secret handshake, or like you don't wear a pin, or a letter on your head, or anything like that.
I don't know if you knew this. You probably did. We do have a secret way of finding other non-believers, though.
Tell me.
When you're in a large public gathering, anything from a Rotary Club to a city council meeting, when there's the obligatory prayer that's being done, the non-believer might keep their head up and look around, and you look across the room and you see someone else who's looking around. You're like, hey, you, you and I, we're going to talk after this meeting is over, because we're the only two people who aren't playing along with the head being bowed thing, so we should talk. And so that's a great place to meet people.
I hate to tell you, Phil, but sometimes I keep my head up during prayer too. So I'm messing up your whole signal, man. I'm gonna keep doing it now too, knowing that. Like, hey, you're my people too. Let's talk afterwards. That'd be fun. It's
not a guarantee, of course, because there's always idiots like you. No, I mean, it's fine. But I've had a really high success rates with doing that, and a couple times I've gotten on boards of charities because there are other people who felt all alone, but we were at some community meeting together, and we both saw each other and are like, okay, Phil's a guy I want to work with because he's not playing along with this. But that's about as good as we got, other than the internet. And you're right. And there's still people today that, because of their families or where they live, or at least they think everyone else around them is sometimes even a specific denomination because their small town has one church. And so that's interesting.
Yeah, no, I think that the reality is that atheists are creating their own communities that in some ways resemble a religious community. Right. I think that's something that we're only starting to understand now, is that you can create, religion is basically just a social group that just has this deification idea, right? Like this supernatural aspect to it. And from a social science perspective, it's just a group of people hanging out once a week or more than once a week. And, you can have that with atheists. It's just they're a little bit, have you heard about Sunday service, Sunday gatherings?
I know of them. Yep.
Yeah. That's like the same thing. They realized that they needed a sense of community too. So it's just really interesting that, like, no matter how far you get away from the religious piece, the social piece still needs to be there for everybody, and we can't ever get past that.
Yeah, I'm just scrolling through your book, and again, like I said, I enjoyed it. Page 28, hopefully it formats the same way in the printed version. I'm looking at the percentage of no religion from 1972 up until 2018, went from 5% to 37.4%. This is from the General Social Survey Project. Yep. That's a really big shift. Now, of course, a big chunk of your book, deservedly so, is what does it mean, no religion? Not everybody in that group is an atheist, but people who are, disassociated, unaffiliated, don't want to play along with any kind of religion, or at least claim to. And that gets back to one of the early points, is that how much is this an actual increase within the population, and how much of this is a change in someone's desire or willingness to acknowledge that they're not in a religion?
See, that question is incredibly hard to answer, right?
I know.
Because
that's why I asked you.
Yeah, I know. But I will say this: if you look at that's what we call a belonging measure, which is like what your religious belonging is. There's behavior measures, which is church attendance. That's usually the way we measure that. But then there's belief measures, which are, what do you believe about God? Like, God does not exist, or, we'll never know if God exists or not. That's sort of like the agnostic option. Only about 10% of Americans fall in that camp, by the way. They're atheist or agnostic by belief. So when we talk about the nuns, like, there's different dimensions of being a nun. There's behavior, belief, and belonging. And behavior is going to church. Belief is, some sort of belief in God. And then belonging is saying that you're part of a tradition. 60% of Americans both believe, behave, believe, and belong. So, a big chunk of Americans still check all the boxes. But if you want to see which one goes first, it's the behave one. Most Americans, if they're going to be a nun, just don't go to church. But they still have an affiliation. They still believe in God. And then the belonging thing is second, and the belief thing is last. Like, America still has a stubbornly high religious belief, despite the fact that huge chunks of them have no religious affiliation. So it's interesting to think about, like, psychology versus sociology, and religion kind of cuts across both those fields, because it's an internal thing, but it's also an external thing as well. And that's what makes answering questions like, have people always been lying, and how much have they been lying?
Right.
Basically impossible, because you don't know what's going on. Listen, I joke with people, my job is to try to figure out what in the heck goes on in your head when you step in a voting booth on election day and push the lever for this guy instead of that person. Like, it could be you don't like their monetary policy, or it could be you don't like their haircut.
Yeah.
Or you just messed up and hit the wrong button.
All of that is possible.
Yes, and that's my job. Like, what kind of ridiculous job do I have?
And of course, unfortunately, you get this data often summarized, grouped together. It's hard to look at one specific person that took a survey and then know what is specifically driving them. Because one of the things that you had, which was over time, how many people that were nothing in particular, agnostics and atheists, eventually changed back to being religious or Christian or other religions. And it happens pretty darn small for the atheists, probably within the margin of error. But some people aren't religious and then become religious. How does that happen?
I'll fully admit, I think part of it's measurement error.
Yeah.
I don't really think it's an honest to God real change of heart, but I use panel data, which is where you ask the same people the same questions over a period of time. And this was in 2010, 12, and 14. Ask the same people the same questions. What's your religious affiliation? And, almost all atheists and agnostics were still atheists or agnostics 4 years later. Like very few had changed to be anything else. And if they did change, they changed to become an atheist instead of an agnostic or nothing in particular. They didn't go back to theism. They didn't become religious anymore. But amongst the nothing in particular group, 60% were still nothing in particular 4 years later, but 20% became atheist or agnostic, and then the other 20% went back to a religious tradition. So,
right,
Islam.
Or at least they indicated their answer.
Yes.
And so and I know you know this, and it's just fun to just talk about someone who gets it. If 20% of the nothing in particulars marked nothing in particular 1 year, and then 4 years later marked, okay, I'm Christian, or I'm Catholic, or I'm atheist, or I'm agnostic, did they actually move at all inside of their own head, or did they just give a different answer for whatever reason?
I think the answer is somewhere between all that stuff, right?
Yeah.
I think it's, we talk a lot in, like, if you go to grad school in political science, you spend a long time talking about public opinion research and like how hard it is. And, there's this key work by a guy named John Zoller where he says that what we really do with surveys is get top of the head.
Yeah.
So whatever's like in the front of your head whenever you answer the survey is what you get. So whatever's on their mind, let's say they went to church last week because their grandma was in town and they wanted to go to church. You'll say that you're Christian because you went to church last week when really you didn't go the 52 weeks before that. It's just the survey caught you at top of the mind. At some level, and this is like, I know this is like not a great answer, but I'm a big believer now in when people tell you who they are, believe them. I'm not going to get into a game of like trying to like parse out like, are you really lying? Or, like, do you know what these words mean? Like that gets in a very gray area. And I also think it becomes very paternalistic and very sort of, it becomes very like, I'm smarter than you. Like, like if you say you're an evangelical, you know what I say? Okay, you're an evangelical. Like it's not my job to say, no, you're not.
Yes.
I mean, that's just very, it's not my place. So when someone says they're an atheist, okay, you're an atheist as far as I can tell. And if you say you switch, and I know it's not true. Like I know some people are just like mashing buttons on the survey to get paid at the end. I totally understand that. But there's no way to parse that out in any meaningful way. And I will say this, consistently over time, these very large-scale surveys of tens of thousands of respondents sort of coalesce around these ideas. Yeah. So it's, it's not just throwing darts at the wall, but the darts have a little bit of an accuracy problem. But if you throw a bunch of darts, you sort of cluster around a central idea, and then we can run with that idea.
I like it very much. And of course, I had alluded to, maybe stated clearly, you're a Christian.
Yes.
And I don't know where it was, 70%, 75% of the way through the book. I was like, whoa, he really is.
I am. Yeah.
Because, and it almost struck me as odd. And not in a bad way, so forgive me if I can't explain myself clearly. For the majority of the book, it's about the data, it's about the facts. You are presenting possible interpretations of that data, some that are yours, some that aren't yours. Very matter of
neutral.
Fact. Yeah, very, very neutral, very matter of fact discussion of what the data is, how it's collected, the problems and the strengths of it. And then it gets to the last section or two where it's about, okay, what can religious people do with this information to I guess, bring more butts in the seats? And so my listeners, if you read this, it's great to get that different perspective that you probably don't normally hear.
Yeah.
But what is a church to do nowadays? How do they get people in? Because that seems to be a big problem with some few exceptions, of course.
So that last chapter was really trying to tell people who were in my spot as pastor, seeing their churches get smaller every year, to say to them in some small way, what was happening is not because of you, and you probably can't change almost any of it. I think there's these macro level things that happen in the world that are impossible to hold back. And so in the last chapter, I compare secularization to globalization, which I think is a pretty good comparison because, policy in America for a long time has tried to beat back globalization. Politicians rail against globalization all the time, especially our 45th president, tariffing goods from China. trying to incentivize Maytag plants to stay in Indiana. All these were just trying to hold back a hurricane with a rickety door. It's just not going to work. And the same thing is happening with secularization. Secularization is just washing over America now. And no matter how good you preach and how, many smells and bells your service has and all the free stuff you give out in Easter Sunday is not going to stop the vast majority of secularization. So sit back and understand that you are not all at fault for what's happening here. This is just what was going to happen, whether you were good at your job or not. I will say this. My perspective on this whole thing is that I am not an evangelical. I am a mainline Protestant, which means my perspective on these matters are this works for me. I find a lot of comfort and hope and peace and good feelings out of my religious beliefs. I fully understand and expect that other people will not see the world the same way that I do. I fully appreciate that for many people in America, religion is a net negative for them. It's made their life worse. It's made them feel persecuted, ostracized, left out, left behind. I completely understand that. But I do think that there is something to be said for people still being part of social groups in America today. And in a world where the Rotary is closing down, the Lions Club, the Moose, the VFW, and every other social club in America is on its last legs, most churches are still kind of hanging around and do provide a social benefit to the community and their members. And I do think that some people could benefit just from the social piece of the whole thing. So, that's sort of I'm not going to say you're going to hell or not going to hell based on what you believe about, theological things. But I will say, for me, it's made my life more full and fulfilled by being part of a church.
Yeah, and I think there's merit for that group thing, and it is interesting. I'm also in Rotary, and it kind of, in some ways, looks like church, where the members keep aging, and the young members don't want to join, don't see the value in it. Maybe they get fulfillment online. Maybe they don't know what they're missing, kind of thing. But it was funny, the thing that you tweeted, I think it was this morning, about Methodists that I mentioned earlier. In the last 7 years, at least from 2012 to 2019, over a 7-year time period, the average age of the membership of the United Methodist Church increased by 7 years over a period of 7 years, which tells me that ignoring sample size errors and variations within that margin of error stuff, basically nobody fucking joined that was young, the United Methodist Church on average, and given another 10 or 15 years, they're pretty much going to have to close because everyone's dead.
Well, United Methodist is an interesting spot because there's a schism coming up in the United Methodist Church over gay marriage.
Yeah, I'm familiar. I actually grew up as a Methodist till I was 13, but that whole gay marriage schism. And of course, that might even push more people in the general population to not want to go, just like you actually mentioned. I'm so sorry, I'm dumping multiple topics on you. The religification, the politicization of religion, where if you feel like you have to be in a specific party to be in a specific church, you might just agree with the church, but walk away because you don't like what they're doing with religion and in its relationship to politics.
Yeah, no, I mean, religion's a voluntary exercise, at least in America it is.
Yeah.
So people want to go where they feel welcome and feel like they're part. And so why would you go to a church where, like, say you're a Democrat, but you're also evangelical? Like, why would you do that to yourself? Like, why would you be subjected to, like, the worship of Donald Trump every Sunday when you obviously don't like Donald Trump? So it makes perfect sense for people to walk away for political reasons. The problem with that, though, is there's this perception that people have of American Christianity that, like, if you're Republican, there's options for you. If you're a Democrat, there's options for you. If you're a Democrat and a white Protestant in America, in most communities, there is no option for you. There is no church that is majority Democrat. And what I tweeted out today is people don't realize, like, my conservative friends love to rail against the Episcopalians because they're liberal, quote unquote.
Yes, they are.
But for every one Democrat Episcopalian in America, there are 6 Republican Southern Baptists. Like, it's not even the scale is completely different the right wingification of white Protestant Christianity in America. In 1978, half of white weekly church-going Christians were Democrats.
Right.
Today, it's 25%. Like, what happened? And I'm an advocate, and I'm very honest about this. I think the church is better when it has Democrats and Republicans all together in the pews. When you have a plurality of opinions on everything sitting in the pews side by side, because you can have real conversations with church folk. That's sort of what that group was supposed to be about. And when the church basically purged out all the moderates and the liberals, what you're left with is just these echo chambers that continue to trend further and further to the right, which, by the way, alienates more people from that church, but also makes that church more extreme at the same time. Two things that are bad.
It's a feedback loop.
Yes.
And it's funny because every once in a while when I go to a different Rotary Club, I might point out to the leadership that their club seems to be appealing only to Christians by the prayer, by doing the pledge, by having an invocation. And I was talking to one of the presidents several years ago when the meeting was over, and I said, this group comes off as being very Christian, and I worried that it's failing on some part of Rotary, because Rotary is supposed to be, without regard to religion or your political agenda, you just want to help people and do the mission work that Rotary does in a secular way, using the word mission. Mm-hmm. And he said, but everybody in this club is Christian. And thankfully, one other person stayed behind and joined in our conversation. He says, I'm not Christian, and I feel a little put out every week, and that maybe I should quit because I'm not Christian. And the president was just flabbergasted, because no one had ever said that out loud before, that maybe their very behavior limits the people. And kind of in a way, if I'm going to pitch for religion now, which is a little bit of what you did at the end of the book, if you want to appeal to everybody, you have to fucking appeal to everybody. And if you start getting into politics, politics will consume your religion and use your religion and then drop you like a hot fucking potato when you're no longer a benefit to that politic.
Yeah, Michael Jordan's my favorite. He was asked one time about what his political stance are. He goes, hey, listen, man, Republicans buy sneakers too.
Yeah.
And I think that's what churches need to understand, right? Like, the Democrats can be Christians too, and they have been historically for a long, long time. I mean, going back, even Martin Luther King Jr. was a Democrat and a Christian, right?
Yeah.
William Jennings Bryan was a fundamentalist Christian and a Democrat, a Bernie Sanders socialist, but also believed the world was created in literally 6 days.
Well, the least amongst us, right? Where'd that go?
Well, that's because the social by the way, 100 years ago, the best-selling book in America was The Theology of the Social Gospel. So best-selling book in America for 3 years in a row.
Wow.
And now it's considered heresy amongst most mainstream Protestant Christians.
Well, opposite thing with Christmas. It was forbidden and banned by most Christian organizations. Now it's embraced, and if you say Happy Holidays instead of Merry Christmas in a store, you're a heretic, when it actually was the opposite not that long ago. I've got one other thought I want to share, and then, of course, you can add in some stuff after this as you wish. You have this line that jumped out at me, and it says, at least atheists and agnostics have a worldview they agree on. I am here to tell you that is not true. Now, maybe you meant it only in the context of the subject matter you were talking about.
Yeah.
But the idea that there's an atheist or an agnostic worldview, you couldn't be more wrong. And maybe you and I can have a coffee or a tea or a whole meal or an entire retreat to discuss this. But I have found atheists and agnostics that share any and every alternate worldview about any topic. Flat Earth, Twin Towers, atheists that think there is no God, but Jesus existed and had magic powers, ghosts, not ghosts. There is really nothing. And it's funny because from an atheist perspective and my involvement in the secular movement, it's one of the single biggest problems, because how do you unite people that don't have anything in common other than one thing they're not convinced of? That's a rough gig.
Yeah, no, so I think in the context what I was saying was at least comparing them to nothing in particulars.
Yeah.
Because nothing in particulars have literally nothing
right,
that binds them together. Like literally nothing. Atheists have one more than nothing, right? which is a general orientation towards the divine, right?
Right.
I do think there's a lot to be said, though, that for many atheists, politics has become a pseudo religion for many of them. And you see that in the data. Like, they're very politically active. They go to marches, they go to rallies, they donate money, they volunteer for campaigns, they do all the things that, by the way, more than evangelicals do, because that sort of becomes their reason to be. And interestingly enough, to go off on a little jag just for a second, there's this great question they ask on the survey that I have, where they ask you to place yourself in ideological space between very liberal and very conservative, so like a 7-point scale. They ask you to place the Democratic Party on the same scale. They ask you to place the Republican Party on the same scale. So it's really fun because you get to see like how people perceive the political landscape. Yeah. So I love that stuff. So most groups, like for instance, evangelicals think that the Democrats are like as far left as you can get and are getting farther left, like just trending way. Right. And then they're getting more conservative. They actually think they're right on top of the Republican Party. Like they see no difference between the Republicans and them. But in comparison, atheists see the Republican Party getting more and more conservative every year. They see themselves becoming more and more liberal every year. But in the last 4 years, they perceive the Democratic Party becoming more moderate. Yeah. They're the only group in America, atheists are, who think they're more liberal than the Democratic Party. Yeah,
and that sounds, on average, right to me and fits in, with that narrative, the averaging. Of course, everyone's different. One of the topics we started with. Anything else you want to add? Any references? People should follow you on Twitter, read your book. Hit me.
Yeah, so, read the book's available for order right now. The Nuns, go on Amazon, buy it. You can go to my website, ryanburge.net. I write a bunch about the nuns. I published 24 journal articles, and several of them are on the religiously unaffiliated, including one where I just used machine learning to try to guess who was an atheist in a survey because they didn't have the atheist option, which is pretty fun. Yeah. I love doing that kind of stuff. You can follow me on Twitter at Ryan Burge. I tweet. If you like graphs about religion, you're gonna like what I do. Because I don't bore you with like what I ate for breakfast and how I feel about Britney Spears or whatever else.
Free Britney, by the way. Just go ahead.
Yeah. Free Britney. Hashtag Free Britney. Yeah. She really got a bad deal out of the whole
I
thing.
agree.
Yeah, like how does she only have $60 million when like Jessica Simpson has twice as much and she has half as much talent? Makes no sense to me. But anyway, not to go off on a pop culture jag. So RyanBurge.net. I also write for a website that I co-founded called Religion in Public, religioninpublic.blog. It's basically a clearinghouse for all of us social scientists who do empirical research on religion and politics in the United States. So myself and a couple other co-authors who publish, I write about 2 pieces a month for that website. We started in 2018. We had 23,000 hits. We had 30,000 the next year. We had 100,000 the year after that. And we had 180,000 hits last year. So it's really taken off. And it's being mentioned in big-time articles and publications and all that kind of stuff. So if you want to take a deep dive in American religion, you really care about this data, that's really the place where all of it happens. So religioninpublic.blog. That's my stuff.
Excellent. Listeners, one more time, Ryan, R-Y-A-N-P, middle initial, in case you have trouble finding the book, which I don't think you will. No. Burge, B-U-R-G-E. And like I said, the vast majority of the book is a very clear-headed and very thoughtful look at the data, and then at the end is Ryan's suggestions how churches can use this data and maybe for their own benefit. And of course, readers, if you're atheists and agnostics, it's really good to understand other people's perspectives, so don't fight it.
You can just stop reading it if you want the last chapter, guys. I really don't mind. As long as you buy the book. I'm a dirty capitalist, so just buy the book so I can write another book.
Yeah, sometimes I tell people that you don't have to read it, just buy it. But Ryan, thank you so much for taking your precious time to come talk to us here on The Phil Ferguson Show.
Thanks, Phil. I appreciate it.
This survey of American beliefs showed that Americans, at a rate of between 48 and 51%, don't believe in evolution, which is like half. And on top of that 50-odd%, a further further 38 to 40% of Americans believe that biological evolution has occurred, but believe that it was initiated by and has since been kind of administered by God. Leaving a very small percentage of Americans who are right. It's not my theory. But I've done material about evolution before, and in Australia and in Britain it barely raises an eyebrow. It's just worth a chuckle. But in America, it's quite contentious to do comedy about evolution, you know. It gets a gasp. It's the equivalent of doing material about fisting anywhere else, you know. It's quite confronting for them. I've been heckled by a man in the front row in New York loudly defending his disbelief in evolution. I've been pulled aside in foyers by people defending their disbelief in evolution in the same terms, interestingly enough. It's the same defense that the intelligent design movement uses in the high courts of American states to try and sneak its pseudoscience into American high schools. And that defense is always, but evolution is only a theory. Which is true. I mean, it is a theory, and it's good that they say that. I think it gives you hope, doesn't it? That maybe they feel the same way about the theory of gravity. And they might just float the fuck away.
Again, a special thank you to Ryan Burge, for coming on the show. I do recommend the book, and as you heard in the interview, I had a little bit of a pushback when he started to get maybe a little too religious-y for me, but as I also said, it's good to hear the thoughts and the mindsets of people that have different perspectives than you. So make sure you keep your mind open and give consideration and thought for people with different positions, I guess. You know what I'm saying? Again, if you like the show, you can go donate, contribute, join patreon.com/Phil for as little as $1. You can give a 5-star review on Apple Podcasts or Stitcher. If there's anywhere else that you can leave 5-star reviews, let me know and I'll mention them too. Again, a nice long show. Some updates, by the way, other random things. Solar panels are now fully functional and cranking out a lot of power because the snow is gone. The sun gets higher in the day, and every couple of days, I'm setting a new record for energy creation. I think the last one was close to 40 kilowatt hours, and we're talking mid-late February. 40 kilowatt hours. The average family, the average household in the United States uses a little bit under 30 kilowatt hours of energy in a day. My household is a really big user of electricity, in part because we have 2 cars to charge. So we use a lot of electricity, and I'm hoping that late May, early June, maybe I'll get a day where I get over 80 kilowatt hours of energy created in one day. So having some fun with that. That's all working great. Still can't travel, although it looks like things with coronavirus are improving dramatically. The number of new known infections has fallen significantly. I guess we had some bumps from Thanksgiving and Christmas and New Year's, and everyone got that out of their system. And I think the really big unknown is how many people have been infected and not known it. I know we're over 25 million known infections, and we now have probably 30 million people that have been vaccinated, at least one shot. And I think it's Johnson & Johnson, and maybe AstraZeneca either are or will be approved here very shortly. And hopefully in the next month or two, you won't have to make appointments and wait in really long lines. And maybe you can just go to your local pharmacy, drive up, drive through, maybe hop out, stand in line, and get injected outside. I've seen some pharmacies that have already built like little booths, little buildings in their parking lots, already ramping up for all of this stuff. So once we get healthcare workers, people over 65, people with high-risk conditions, first responders, maybe even teachers and people that work in schools, so the schools can all open up and be much safer and more secure. We'll drop down to probably 55 and over, And then there have been some mentions that maybe by April or May, it'll be the general public. And hopefully by summer, the number of infections will be really small. Of course, the big unanswered question is, do you need to get a booster every year? And it's kind of looking like they're thinking yes, but I don't know. We'll find out. And hopefully somewhere by the summer, we'll know that we can actually start meeting together. You still might want to have your mask. You still might want to socially distance, but maybe we can have a conference in a room that's a little too big for the conference. Maybe I can buy a plane ticket to Italy. We'll see. Once again, thank you for listening to the Phil Ferguson Show. I am delighted that you are here, and I'm delighted to be able to make this helpful, informative show for you. If you have any questions, want me to review anything, that you can send an email, phil@polarisfinancialplanning.com. For new clients, the idea of new clients, by the way, I'm currently on hold. Maybe I should say anything under $2 million. Probably can't talk to you right now because of business demands and tax season coming up. But if you have 5 or 10 million, feel free to call me. We can talk. Maybe all you need is a little conversation to point you in the right direction. Maybe you do want to hire me. I'd be happy to talk to you. Again, phil@polarisfinancialplanning.com. Thank you for listening, and I do hope to see you out there on the road in person some point soon. Until then, ciao.
Brothers and sisters, prayer is a powerful thing. In these trying times, we pray. We pray hard. But there are some matters where we would be better servants of the Lord by accepting what He is and not bothering Him. Come on! You can't pray the gay way.
You can't pray the gay way.
No matter what your preacher say.
No matter what your preacher say.
There's no fighting DNA. You can't pray the gay away. Mama, oh mama, you can't blame yourself just 'cause your baby boy took your high heels off the shelf. Daddy thought football would make a man of him, but now he spends all his time cruising the gym. You can't pray the gay way.
You can't pray the gay way.
No matter what your preacher say.
No matter what your preacher say.
There's no fighting DNA. You can't pray the gay away. Well, the Reverend Bill at the Church of Christ says he needs reprogramming.
That boy ain't right.
Sent him off to camp where he could get fixed. Half the summer of his life never saw so many dicks. You can't pray the gay way.
You can't pray the gay way.
No matter what your preacher say.
No matter what your preacher say.
There's no fighting DNA. You can't pray the gay away. You may not know it, but you know lots of them. Statistically speaking, 1 out of every 10. Every family's got one. You might call him Auntie Fred. Mama says he's harmless less he's trying to give you head. Oh, you can't pray the gay way.
You can't pray the gay way.
No matter what your preacher say.
No matter what your preacher say.
There's no fighting DNA. You can't pray the gay away. Hey, you can't pray the gay away. Amen. bless your heart.